Hello, welcome to another trading day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. More pressure on disposable income of Nigerians as fuel prices rise again. And Malawi generates a significant 150 million Malawian kwacha from carbon credit trading. And the Central Bank of Kenya revises its economic growth forecast for 2024 to 5.15%. And it's good to have you join us. I'm Ladi Williams. Let's get a check on the commodities market. Now, that's a global commodities market. We see gold prices recovered slightly today to snap a six-session losing streak, while traders remain focused on key U.S. inflation reading that's coming out today. That's going to tell us if the U.S. Fed is going to go another jumbo 50 basis points cut, or maybe a 25 basis point, or maybe no cut at all, depending on how that data looks. Spot gold, 0.2% up, $2,614 per ounce. Then we see U.S. gold futures, that's up 0.2%. Same range there, $2,631 per ounce. So we see the bullion investors there looking out for what's going to come with this data. So volatility is expected once we're all expecting U.S. CPI data. We see platinum losing that $1,000 psychological level, $958, but still up 1.4%. Silver, $30.60, 0.3% up. And there we have it for palladium there, $1,052. Oh, palladium retaining that $1,000 levels. Platinum, that's at $900. Let's look at oil prices now. They did rise in early Asian trade, but concerns about potential supply disruptions in the Middle East, with Israel planning to strike oil producer Iran, and on spikes if fuel demand as a major storm has barreled into Florida. So we're seeing geopolitics and the weather there impacting prices, and that's for the oil market. We see Brent, $76, up 0.3%, and the spread closing, $73 now for the U.S. grade, WTI, 0.4% up. So we see the spread there, just about $3 at this point. So it's getting closer. That's the spread between Brent and WTI. So we're still seeing geopolitics and weather and demand forecasts impacting this market. Well, to other matters now. The Prime Minister of Grenada, Dixon Michel Tours, has toured the Dangote Refinery, with more visits continue to pour in, the Dangote Refinery here in Lagos. And we see the latest from the Prime Minister of Grenada. The Prime Minister, Dixon, was received and led on the tour of the refinery by the chairman and CEO of Dangote Group, Mr. Alhaji Aliko Dangote, and other top ranking staff. So we see the Dangote Refinery getting a lot of attention globally, at this point. So we'll see more visits, I'm sure, coming up ahead. Now, we see the Nigerian Association of Liquefied Petroleum Gas Marketers. They believe that there needs to be more conversations on the adoption of renewable source of energy. This is the crux of the national conference, which had the theme Sustainable Energy Growth in Nigeria. Take a listen.
The search for sustainable energy growth in Nigeria has attracted policymakers, lawmakers, as well as industry players to the National Liquefied Petroleum Gas Association 2024 conference. With the entrance of more investors and attention gradually shifting from the use of fossil fuel to cleaner forms of energy, the association believes there's a need.
You will all agree with me that in the recent year, a lot of change has happened to the oil and gas industry in Nigeria. So many progress has been made, and there are so many miles to be covered. And as a stakeholder that is passionate and concerned about the future of the industry, we deem it fit to call a meeting of stakeholders and brainstorm on some of the opportunities we have and other challenges. Whatever we discuss here is going to be a communique that will be sent out to the public, to the government in authority as a way forward. And we find it essential that there's a need for us to meet and provide how we want the future of this industry to be shaped.
With Nigeria's proven natural gas reserve of 206.53 trillion cubic feet as at January 1, 2021, according to the Department of Petroleum Resources, the federal government invites all to make its gas plan work.
Our target is ambitious to increase LPG consumption in Nigeria to 5 million metric tons per annum by 2030. This goal is achievable if we continue to build the necessary infrastructure, ensure market stability, and promote policies that incentivize investments in the LPG value chain. I commend the Nigerian Association of LPG Marketers for your critical role in this value chain.
Safety amidst the adoption is a major concern for the Lagos State government.
You need to work more with our states. We need to partner effectively and efficiently. While as a government, we put a lot of organization to ensure safety of life and property, to ensure that you bosom economically with your products. We appeal to you to please pay your tax very well.
The federal government has been seeking ways to accelerate gas adoption, not just for LPG, but also CNG, the latest being a flexible payment plan for the conversion of vehicle engines to run on compressed natural gas as part of efforts to get Nigerians embrace the fuel as an alternative energy source.
All right, now to our first conversation. We see data from the National Bureau of Statistics shows in the second quarter of 2024, total capital importation into Nigeria stood about $2.6 billion, higher than the $1 billion recorded in the second quarter of 2023, indicating about a 152% increase in compared to the preceding quarter. But looking closer at the sectors, we see oil and gas attracted a share of about 0.19%. That's about $5 million. Power, that's electricity, got about 1% of that at $26 million. And now we see Nigerians having to pay more for PMS and also electricity. Shout out to the Band A consumers. Join us now to discuss more. We have Temitope Kolade, is a senior manager, oil and gas and power at Anderson. Great to have you on the show.
Yeah, thank you for having me. Good afternoon.
Yeah, Kolade. But Kolade, can I ask you a personal question?
Yeah, sure.
When last did you buy fuel?
When last? Maybe about 2 weeks ago.
2 weeks ago. Wow. So that means you're not experiencing this new surge, because my fuel is down right now, but I'm afraid to go to the pumps because I don't know what I'm gonna spend. I don't know if you can hear me, Kolade. Can you hear me now?
Yeah, I can hear you now.
Fantastic. So I said I'm afraid to go to the pumps. I don't have much fuel, but I'm afraid to go to the pumps right now because I feel like I might be spending everything, to fill up my tank.
I doubt you have an option.
Yeah, I feel like I might get my bicycle at this point, Kolade. But you know what? Let's look at this data, for the second quarter. Oil and gas getting less than 1% of the total capital importation into Nigeria in the second quarter. How are you seeing this number?
Sorry, Ladi, I'm losing you.
Yeah, so I'm saying the data now. Let's look at the data. The second quarter data, we've seen oil and gas, that industry just attracting about 1% of the total capital importation for the second quarter. How are you seeing that number?
Abysmal, because apparently what we've gathered is that for the oil and gas industry, particularly the upstream sector, to deliver at the 2 million barrels per day that we expect, we need about $20 to $25 million annually to get into that sector. And what we're seeing, it's not anywhere close to it. Apparently the government is doing quite a lot. When you think about it, there is a couple of policies that have been issued here and there, fiscal policies, how to make business easier for people who do business within the sector, how to ensure that, we get some speed in terms of the investment that you get through the local content and all of those. Unfortunately, those are not just the things that need to be done. It appears that we are trying to recover from very many years of non-investment within the sector because of the sort of delay that the PIA got before it came into force. And it looks like we're just trying to play catch up. And there is there is the need for a renewed strategy to get people to invest into the oil and gas sector in Nigeria.
All right, so looking at where we are right now with the oil and gas industry, would you say, give an estimate of how many years of not doing the right thing, got us to this point? Like, would you say as back as 40 years, or is it a recent development of activities that's leading us to what we're seeing right now in our oil and gas industry?
It's more than 10 years. You recall that the PIA, for instance, the Petroleum Industry Act, took a very long time, more than 10 years, to eventually get passed in 2021. That's on the one side. We also took the plan to begin to divest. The international oil companies, the IOCs, began to divest at some point, and between 2010 and 2022, about 20 assets were divested into the hands of the indigenous players. Unfortunately, some of these things happen, and the people don't have the funds to really drive the investment within that sector. And so you see they're sitting on the asset, they're not optimizing it. About 15 15 companies took those 20 assets, but they've not done so much about those assets that they've gotten. So it's a number of years, and it's coming to that point where it may be necessary to begin to apply the provision of drill or drop that is contained in the Petroleum Industry Act, where you just say you can't sit on this asset for too long, you've got to develop it. Sometimes you complain about vandalism, we complain about crude theft, but again, there are assets that you see people have the licenses, but they're not operating them. They're looking for funds here and there because, again, the processes that led to acquiring those assets in the first place were not maybe transparent enough. These people didn't show that they had the funds to drive the process.
Right, and at this point, it's you're recommending drill or drop. That's what's contained in the PIA. So if that happens, if most of these licenses that are not operating, if they're actually dropped, at this point, what's the process, for that?
Well, the process is very simple. The NUPRC in itself would have to get into that process and ensure that if you're dropping those assets, you get new investors. There are conditionalities in the agreements that were signed with the potential operators before, and they would have to go through all of the conditions and clauses in the agreements to ensure that they're not losing so much by dropping those, but we have people who are qualified, people who have the funds to drive it. Again, because what you see within the oil and gas sector is a capital-intensive project that typically have to be run. It doesn't take a very short time to get to market. And so sometimes people don't even have the sort of experience to run it, but somehow they get those licenses. And if they drop it, you can be sure that if we have the right sweetness, like some of the policies that we now have in terms of the fiscal policies. And then again, we are able to deal with some other issues like the monetary issues that Nigeria has in itself. You'll be able to encourage the right set of investors into the sector and would see things turning around.
Right. And according to the Minister of State for Petroleum, Oil, Mr. Heineken, Senator Heineken Lokobiri, said some South Korean investors are planning about 4 Nigerian refineries, at this time. And he also talked about investments around the range of about $50 billion or so that's supposed to come in to this oil and gas industry. So, it sounds good and all of that, but what should the government be doing right now to actually make this a reality and making this refining market attractive for investments?
From the fiscal point of view, I think that we see that a lot has been done. So many things have been put in place, whether it's with respect to gas investment or deep offshore investment. There are a lot of sweeteners already in terms of the fiscal incentives that you see. But again, we must step back and say, are the fiscals just enough? The speed to get regulatory approvals is very important. Sometimes it takes a very long time to get ministerial approval in itself. And of course, you would ask who is our minister for petroleum, right? So the process it takes, again, maybe because of all of the people who are like in between that process in terms of mediators of that process, they make it too long to ensure that ministerial approval is obtained for investments that people want to do in the sector when you're transferring from one operator to another. That has to be sped up in some way. And government doesn't have to just say that we will do it. They must demonstrate it. They must throw their weight behind whatever investments or investors that are willing to put something into that sector. And again, transparency must be made very clear. And it's not just as though people must be transparent or the government should be transparent, but they must be seen to be transparent. When you say people are bidding for certain assets, you must ensure that in that case, you make it very clear. These are the financials, these are the expertise, this is the history, this is the trajectory that the investor or the potential investors have demonstrated, and we see that this would give us a better deal. They are going to get to market very quickly, and so that's the basis for which we're choosing them. So all of that is very important. I think that the trust deficit that is within the sector needs to be brought back, it needs to be repaired, and we need to bring trust for governments and the policies, and that we will not have policy somersaults down the line. Those are very important beyond whatever you see in terms of the fiscal incentives. Like I said again, the monetary policies are also very important because people want to put their money in and they want to be sure that they can take it back without much hassle. So a couple of things to consider indeed.
Right, and looking at where we are right now with energy prices, it almost seems like you just expect prices will go up again, at some point. We're seeing that happening right now with PMS selling above 1,000 naira in some areas. So how long will this continue in your view?
It's unpredictable, I would say. But again, the sort of thing that we should expect in Nigeria is energy security. And we should be energy secure. Why? Because we produce the crude, right? If you produce the crude, if you look at what happens in Saudi Arabia, for instance, if you see what happens in the United States of America, because they produce crude, they get it for less in terms of the petroleum, motor spirit, or every other refined products that you get from crude. Right, they get it for less compared to other countries where they don't produce, and that's the sort of competitive advantage that we should have. So Dangote Refinery, for instance, good enough, 650,000 barrels per day to deal with. Can it get the resource without going outside of Nigeria? If that happens, then we are getting more energy secure in Nigeria. It means that we can supply the crude to Dangote, and we can expect that we take a lot of arbitrage or logistics cost and all of those things that would make the price, the landing cost, to be so high for us in Nigeria. And so that's the point that we should really be making, and that's the way we should be going in Nigeria to ensure that we are self-sufficient, we are self-dependent in Nigeria for energy, rather than go elsewhere to source for these things. But
right.
Again, when you think about the pricing, the geopolitical issues are still right there. The Libyan crisis has not ended. The Russian-Ukraine has not ended. Iran is dealing with Israel and all of those. So those issues are still there. And there is very little that we can do about that as a country.
Right. I guess we need to stop acting like an oil importing country at some point. Well, thank you so much, Temitope Kolade, Senior Manager, Oil and Gas Power at Anderson. It was great having your perspective today.
Thanks, Laddie, for having me.
All right, we'll take a break now. When we come back, we're heading straight to the markets. Do stay with us. right, let's get to the markets now, see if it's looking better. But we'll see the NGX there, marginally down at intraday. But we'll have John McCrory with all the details right there with most of the markets we track. Good to have you, Ini.
Thank you, Ladi. Well, we can see it's marginally down today. Continuing from the sentiment it closed with yesterday anyways, even though, well, we're still believing, since it's marginally down, that perhaps something will happen. You know, interesting thing is we saw the Fugas, 4 of them were down yesterday, while 1 was unchanged. And one is tempted to ask if it has anything to do with some of the not so good news that's been going around the banks recently. I know a lot of people have experienced hitches with the apps, using the apps. And then we had that video on social media accusing one of the major banks of, you know, some
malpractices.
I guess we should put it that way, of different faces. But let's find out, perhaps that is also affecting sentiment. You know, let's talk to, sorry, Ladi. Let me move to the guest. Good afternoon, everyone. Let's talk to Mr. Oju Demezue now. He's the Chief Executive Officer and Chief Consultant of Flame Academy joins us from Rwanda, where he is at this time. Mr. Demezue, good afternoon, and thank you for joining us this afternoon.
Good afternoon, my very good friend. How are you guys doing in Lagos?
Well,
I don't live in Kigali. I only came to do some work. We conduct training programs all over Africa, particularly for banks and other big institutions. So thanks for having me in this segment. Good afternoon.
Yeah, thank you so much for joining us. And since you deal a whole lot with the banks, we're just curious. I know that you must have seen that video going on accusing a major bank of some malpractices that shouldn't be heard, abuse of data and all of that. And then now, and we also have a lot of apps. I think Access Bank is the latest to share a notice to say that their app will be off, will not be active for a couple of days because of maintenance and all of that. And I was just wondering if that's what's feeding into the sentiment that we see. We saw Fugas down even this afternoon. Doesn't look like the banking stocks have regained the confidence of the investors. Is this what's affecting them? Well, it looks like we're struggling with Mr. Demezue there. We'll see if we can get a better internet connection with him from Rwanda. And, well, hopefully we'll do that before the end of the program. So let's look at other markets now. We could have those numbers to see other parts of the continent. We see Johannesburg, it's in the green this afternoon, 0.04% up, retaining the 85. Not a lot of movement that we see right there. Look at other parts of the continent. Africa, Egypt, for instance, is in the red, 0.44%, at 31%, and 38.03. For Nairobi, they closed positive yesterday, 0.09%, at 108. They've been like here. I mean, there's stability, but I mean, it gets boring when you see the market not moving that much. Move over to other parts of the world. You see in the Middle East, Dubai is green, 0.20%, 4,431.27. Abu Dhabi in the red this afternoon. Intraday, 9,268.06 is down 0.16%. The Tata war escapes that negative sentiment at intraday, 11,955.10. It's up 0.23%, while Qatar is back in the red, like other markets. So mostly red is what we see for the market. So Qatar is 10,501.16 after it lost 0.08%. Let's see if we can have the other markets while we try to get Mr. Demezue to join us. Can we have other markets? I think the United States will be next. That we can see. There you have it, a red market in the US. We're expecting big economic data in the United States today, the CPI, inflation number, and a market is taking a back seat to see how that number will look like. Of course, then we'll see investors reacting. So we see the Dow Jones, the S&P 500, the NASDAQ, all in the red at intraday. We look at the Asia market now. better color than we had yesterday. Yesterday it was mostly in the red. Most of the markets were in the red. But this afternoon, the close of their trade is, we see them back. They recovered 0.26%. Kospi of Korea is 0.19%. The Hang Seng Index looking comfortable at 2.98%, 21,291. The Shanghai has been a place, to keep our eyes on for like 3 trading sessions now. So we see this looks a bit moderate compared to where we've been coming from. They've had big falls and big rises in the Shanghai market, but this afternoon it's just 1.32% there. And I think there was a close in some of the markets in Asia on Wednesday. They had a public holiday, so we see reactions to that. Also, Nifty of India is partially in the red, but really marginal, 0.01%. 24,980.25. Now, let's see if we can get Mr. Demese back and to try to have that conversation. Hello, Mr. Demese, can you hear me?
Yeah, I can hear you better now. I had to change my network. Sorry about that, Hitch. I had to change from a Wi-Fi to my MTN network in Rwanda. And I think I'm very good to go right now. Can you hear me well?
Yes, I can hear you, and I hope that stays that way. So we're talking about sentiment around the banks, the banking stocks, following some of those not so positive or negative conversation that's been going on, especially in social media. Civil society group had come out to accuse one of the major banks of some malpractices and abuse of customers' data, and then now we're having some banks having issues with their apps, so customers cannot really use it. And we had one of the banks actually share a notice to inform their customers that there's going to be an upgrade or maintenance. And I was wondering if all of this is what's feeding to the negative sentiments we see on the counter, the banking counter at the NGX.
Right, the markets all over the world are facing some level of uncertainties. The global economy is still very fragile in terms of growth. There are concerns in Middle East where wars and escalations are coming up between Israel, Hamas in Gaza, and Hezbollah in Lebanon, and now with Iran throwing rockets, to Israel and giving the world some concern about escalation. U.S. election is coming up. Russia, Ukraine, there's fight, that is subsisting. And in Africa, we have Sudan and a number of other places. And meanwhile, central banks around the world are also grappling with whether to cut rates or not to cut rates, monetary policy concerns, and so on. So, as you can see in your data, most markets around the world are facing, some changes, red today, green tomorrow, and all of that. So, Nigerian banking sector is not different from what's happening around the world. What I want to say is that the social media attacks on banks is very misplaced. Unfortunately, those people, you can imagine a civil society group trying to appraise banks as if they are regulators or conducting audits on banks. It's like if you have headache or you have malaria, you want to cure it, you cannot go to a mechanic. So they are not competent to tell people about what's happening in a bank. And from what I saw in that attack, I think it's just about bitterness. People who are bitter about one thing or the other, who are trying to find a way to pull a bank down. Unfortunately, they are picking on the wrong bank. They are picking on the most profitable bank in Nigeria at the moment, a bank that has the best cost-to-income ratio, management efficiency, with very strong capital adequacy, asset quality, if you understand that. Other businesses are not like banking business. Banking business is unique in the way it is run, and therefore in the way it's appraised. People who are not technically sound in appraising banks might be looking at noise making as a way of a bank being sound. A bank can be very silent, doing its work professionally, and and be very, very strong at the same time. So all the rumors should be jettisoned. They are the work of maybe sore losers of very badly advised errats and distractors and maybe troublemakers. Coming to the issue of disturbances in banks' apps, I'm aware right now the number of banks are trying to upgrade their systems. I know a bank that's trying to move to a Finacle banking software. The other bank you mentioned are also trying to upgrade their systems, their apps, to strengthen them in terms of cybersecurity, because every other day the world is seeing more and more attacks on businesses. So cybersecurity is becoming a big issue. So you see banks trying to quickly update their systems, and protect their banking softwares better. The issue of data misuse is very, very wrong, and it is very false. Banks have the oath of confidentiality to manage customers' data. And the much I know about Nigerian banks, they don't take that lightly. Right from the big, too big to fail banks, and even the second tier and third tier banks. No bank can afford, or they can afford to mismanage customer information. So what?
Wow, looks like we lost Mr. Ademize in spite of the change he did to the network that he's using there. Mr. Ademize, are you back? Can you hear me? Can you hear me, Mr. Ademize?
I can hear you now. This is from your own end. My end is strong here, I believe.
Okay, all right, you're back. Do you want to complete your thoughts, or do I just ask you the next question? Well, I think I should just go ahead and ask the next question, Mr. Ademize. So whether people believe this or whether it is true or not, some of those stories of abuse and abuse of data and all of that, we know that investors are very sensitive. Is there a way you think these negative sentiment or perception could be corrected? Do we need a regulator to talk? Do we need to see numbers from the banks, operation costs and all of that? Do we need anything like that, to try to change the perception that may have gone wrong?
Okay, I think the central bank came out with some statements some days ago to say that Nigerian banks are sound. And in fact, in my view, anybody who watches the economy very well, you find that despite the economic downturn we have in the country, banks are still reasonably stable in their profitability and their outcome and even our outlook. You find that in the banking sector, they don't take human capital development lightly. And that's why that sector is still surviving in Africa. Most African businesses set up billions of businesses without preparing human capital that will run those businesses. You find that most people that even run businesses today in Nigeria, we are trained in the banking sector. So that sector remains strong. And the post-2008 or 2007, 2009 financial crisis, the regulation of banking, which is now risk-based, has ensured that most banks, if not all the banks, are always very strong at a point in time. You hardly see a bank now failing, except the ones that have been sick for a very long time. So these attacks that are happening online are misplaced, and they're happening at a very wrong time. Yes, the economy around the world is not very stable, but if in Nigeria, the banking sector is one of the most stable businesses you can find. So I don't think investors need to panic. That sector is still doing well. And as the banks try to issue more shares to raise more capital, we want to see them very soon upping their game to play bigger in Africa, because I know that a lot of Nigerian banks are playing all over Africa, and the opportunities for them are endless. So these distractors or rumor mongers or troublemakers should find another sector to carry out their trade. The banking sector in Nigeria is very strong, and their outlook is also very strong in my own assessment. To assess a bank, you don't look at physical things. They are what we call CAMEL framework for assessing banks' performance. Only very people can understand the CAMEL framework, not a civil society organization and so on. C, meaning capital adequacy. A, asset quality. M, management efficiency or management capability. Then earnings capability and liquidity of banks. Of course, sensitivity analysis. The central bank assesses Nigerian banks on a regular basis on these CAMEL frameworks. All right, so branch network, number of customers, customer service are all other parameters, but the core regulatory parameters for checking how healthy a bank is the CAMEL framework. And I hope these civil society organizations can consult people like us to put them through these measurements so that they can speak rightly and stop the concoction of half-truths and lies to try to fight a bank, perhaps, that they may not be in love with.
All right, so Mr. Oji Demeze, thank you so much for your perception and your views right there. Well, our job here is to put it out there for the consumers, depositors, and investors to follow up. But thank you so much for sharing that information with us.
Thanks always for having me on your shows, Ini. I'm very grateful. God bless you.
Bless you too. All right, so Ladi, there you have it. I'm sure you saw those videos and a list of not so positive activities
it wasn't looking
connected
good
to a bank, and it can do a whole lot of things, especially now that the banks are in the process of recap investors could get scared and say, I mean, if we see trends like this, it means there's uncertainty in
bank customers don't like to hear such news because definitely that sometimes could even lead to a run, on the bank. So we don't need that kind of news out there. But I'm also curious, what's your plan when your bank is upgrading your app and you can't have access? Have you thought about it?
You walk into the bank.
You walk into the bank?
Yes.
Wow.
Yeah.
Okay, I hope you have time for that.
We'll go to the old school way.
Right. I just hope you have time for that.
I hope so too.
Thank you so much, for giving us details there for most of the markets. Well, let's get a check on Europe now. See, the German government has said that its economy, that's Europe's biggest economy, is on track to shrink for a second consecutive year. Join us for more now. We have Chiponda Chimbelu. Great to have you, Chip. So what did the German government say exactly? And any more details?
Thanks for having me. Well, Ladi, the German government said it was revising its economic growth forecast downward by 0.5%. It now expects the economy to shrink by 0.2% this year. And of course, just weeks ago in the summer, the German government had been expecting the economy to grow 0.3%. The country's economy minister, Robert Habeck, said Germany and Europe, which are squeezed between China and the US, need to learn to assert themselves. But a downward revision, of course, shouldn't come as a surprise to anyone who has been keeping an eye on German economic news. Leading think tanks have already revised the outlooks for Germany downwards. And of course, for now, expectations are that the economy will return to growth next year after 2 consecutive years of contraction. Berlin expects GDP to expand 1.1% next year and 1.6% in 2026.
All right, just how realistic are the projections for next year?
The growth projections for next year and 2026 are linked to the federal and state governments implementing Berlin's latest growth initiative quickly and without any compromises. Now, that package includes tax advantages for companies that want to invest, incentives for older workers and foreign skilled workers, less red tape, and lower electricity prices for manufacturers. Now, that is a long list, which also shows the scale of the structural challenges that Germany faces. On Wednesday, the economy minister said that it has already tackled some of them, but one leading analyst we spoke with here at DW told us that the government is still underestimating the structural weaknesses of the German economy. In fact, many think tanks are more pessimistic than the government. And geopolitics, of course, could also have a major impact on how the economy develops. The conflict in the Middle East has escalated, and the trade row between the EU and China has worsened. And of course, we don't know what the outcome of the US presidential elections will be until early November. So there are a lot of variables.
All right, so how are the markets in Europe looking?
Ladi, European stocks are expected to trade higher today. Now, they are taking cues from Chinese stocks, which surged on Thursday after slumping on Wednesday. Investors are now hoping that a press conference in China on Saturday will shed more light on fiscal stimulus measures aimed at reviving China's economy. But the highlight today will be U.S. inflation data. Now, the latest Fed meeting minutes show that Chair Jerome Powell is unlikely to get the support for another big rate cut. And last week's blowout jobs data also raised questions on whether the U.S. Central Bank made the right call last month. And here in Europe, investors will be on the lookout for the budget of France, Europe's second biggest economy. Now, economic data today will include German retail sales and Italy's industrial production.
All right, thanks, Chip. All eyes on the U.S. CPI. That's for September. That's coming out later today. Thank you so much, Chip. So let's look at other stories now. We see Malawi has generated a significant 150 million kwacha from carbon credit trading, leveraging projects under the Green Development Mechanism and reducing emissions from deforestation and degradation program. According to the Ministry of Natural Resources and Climate Change, this revenue stems from the sale of approximately 75,000 carbon credits, highlighting the country's potential in the emerging carbon market. However, only a fraction has been sold, raising concerns about underutilization of this lucrative market. And government believes the carbon credit initiative could yield as much as $600 million annually if properly developed. And the Central Bank of Kenya has revised its economic growth forecast for this year, lowering it to 5.1% amid ongoing challenges in the global and local economy. This adjustment reflects concerns over factors such as inflation, rising interest rates, and supply chain disruptions, which are impacting various sectors. As the country navigates these obstacles, the CBK's updated outlook underscores the need for strategic measures to stimulate recovery and ensure sustainable growth. I believe we have financial derivatives company next. We see cement is one of the most important inputs for building and construction. Recently, the retail price of a 50 kg bag of cement increased by 13.51%, reaching an average of 8,400 naira in October, up from 7,400 in August 2024. This marks since 5,000 naira, that was about 2 years ago, with bags of cement selling for as high as 8,700 at the retail level. So we're seeing prices of everything going up at this point. Joining us now is Rosemary Adibe, analyst, financial derivatives company. Great to have you on the show. Hello, Rosemary.
Good afternoon. Thank you for having me.
Good afternoon. Great to have you. So, yeah, as I was saying, it seems like I can't find one thing that's not gone up in price in Nigeria. But what factors are driving this increase in cement prices?
Again?
What factors are driving this recent increase in cement prices, and how is it impacting the real estate industry?
The factors affecting the price of cement are increase in cost of production and seasonal factors. Seasonal factors because here in Nigeria, we're currently moving into the dry season, which typically starts in October and lasts through to April of every year. During this period, we will see a lot of building and construction projects happening, a lot of housing startups, which would significantly affect demand. And all things being equal, an increase in demand would definitely influence price. Also, there have been warnings of flooding in 31 out of the 36 states in the Federation. So with many states already experiencing a lot of damages and loss of properties. So some of these properties are houses which need to be either repaired or totally rebuilt. This will contribute to the increase in demand for cement, which will ultimately affect price. So going to the increase in cost of production, this can be due to the depreciation of the naira against the dollar. Going back to June of 2023, we saw the Central Bank of Nigeria making some bold reforms in the foreign exchange markets. So we witnessed the naira depreciating against the dollar by about 214%. And this, we saw the dollar the naira fall from 471 naira to $1 to about 1,472 naira to $1. Currently, the dollar is being sold for 1,680 naira to $1 in the parallel markets. And since the cement industry depends on certain imported materials for the production of the finished commodity, we see the value of the dollar trickling into the market price of this commodity. Also, supply constraints in the US caused by the hurricane, which resulted in drops in production of natural gas in the United States, have also affected the price of cement. This is because the US produces about 33.3% of global natural gas exports. So I say this because although Nigeria produces a significant amount of the natural gas it uses, Nigeria imports natural gas when there are supply insufficiencies in the country. So if there are supply insufficiencies in the country, we do see the global price of natural gas influencing the price of cement. So looking at how it will affect the cost of building project, definitely the increase in the price of cement will increase the price of building and construction projects and housing startups, and even existing buildings for rentals, because cement is not just used for construction and building alone. Cement is also used for maintenance purposes like plastering and repairing of existing structures.
I guess that's why, when I check the real estate market, I see rentals have, gone through the roof, houses for sale all through the roof at this point, rising exponentially. Thank you so much, Rosemary Adibe, analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, let's get a check on the crypto market now. We see it's red on the screen. Yeah, just like yesterday, we're seeing Bitcoin there, investors in that market trying to find out what's going to happen with the US CPI data, and that's impacting the whole market at this point. Is all red from what I see here. So definitely we see Bitcoin 1.98% down. Let's look at the top cryptocurrencies we track, get a closer look into the price action. Now we see the likes of Ethereum. If you could put up the cryptocurrencies that we track, 1.79%. BNB, big 2.68% drop. Cardano, 33 cents, 1.69%. So we're seeing big drops right there in the crypto market. Let's see if that's for sentiment. Let's see if that's bringing on fear. Yeah, it's bringing on fear at this point. 39 points. It was neutral for about 2 days, and now the markets, investors in the market are fearful at this point. Let's see if extreme fear comes into play at some point. Let's look at the headlines now. We see Bitcoin, even with this drop, is the best asset class of 2024. Even though we see markets are bracing for US CPI data, then we also see Bitcoin that becoming is the best asset class right now. Seasonally, it was seasonally weak in the third quarter, according to a recent report from New York Digital Investment Group. So we're seeing Bitcoin there. If you're looking at year to date, it's the best performing asset class globally. Then we see Optimism. That's a cryptocurrency token there is distributing about 10.3 million tokens. So that might impact on the price of the OP token with this release there. Some of those receiving might just go on and sell all of that proceed there. All right, let's bring in Shehu Dania now, as the CEO of Alpha Geek Technologies, joining me via Zoom. Great to have you on the show, Shehu.
Hi, good afternoon, Ladi.
Yeah, Shehu, you're in the UK, right?
Yes, I am.
So you don't have any fuel issues like I'm going through.
I have
here. You have
a lot of domestic operations that require,
Oh yeah, right.
Yeah.
So definitely you're feeling the pinch, even though you're in the UK with PMS prices here. But so let's get into the matter now. We're seeing Bitcoin declared the best performing asset in 2024 currently, even though it's still at about $61,000. It's not gone past new highs, at this point. So how are you seeing this assertion there?
Yeah, so of course, Bitcoin has indeed been an outstanding year for Bitcoin because, of course, we had the halving earlier on in the year, even though we did not get the kind of impact that was expected, but we got more interest. Things like the ETFs, which was also increase the adoption for Bitcoin. So let's look at it in perspective. From the beginning of the year till now, Bitcoin has probably gone over 49%. If you compare with your other traditional assets like the S&P 500 and even gold. Gold has been doing well this year, but pretty much has been about 10%. The S&P has risen about 15%. So if you put everything side by side, the numbers underscore that Bitcoin has done fantastically well compared to these other assets.
Right, and if you look at the market, it almost seems most investors are looking out for that alt season because they know that when the alt season comes, somehow their monies are multiplied even more than just investing in Bitcoin. But it seems alt season is nowhere in sight at this point. And is it ever going to come?
It will come, but it might not be as been over the typical years because now we have more interest, we have more adoption. People are being more cautious as to how they invest in these assets, in this particular asset class. So Bitcoin, because of the fact that Bitcoin is a store of value and is of course referred to as digital gold, that's why we see that the likes of Bitcoin, Ethereum, the top cryptocurrencies are the ones that are doing fantastically well. Alt season will come, but I think it has been watered down by the introduction of these too many meme coins this period. So most investors, apart from high risk takers, would definitely not want to invest in that asset class of different alts.
Right, and seeing there are over 20,000 altcoins there, I wonder what some of these coins are actually doing. At this point, they just keep minting new coins into this market, diluting the value of the market. But do you think investors at some point it'll just be Bitcoin most investors will be looking at in this market?
At the end of the day, it brings the introduction for digital assets. Technically, it's a new way of money. Since we've come from the cowrie days to paper money to long to gold. Now we have digital money, but now the cryptocurrencies, digital assets which are encrypted and on the blockchain will then be a new introduction. So I believe all this is introducing this new asset class, this new type of money, which is we're all going towards a global economy where different countries are able to operate with each other. So I believe that in the nearest future, the stable coins will come to stay. Most countries will either endorse or have their own central bank digital currencies, which would then be spendable between their citizens. As we see, even in Nigeria, we've embraced regulation has come for digital assets. We also see that NIBS is also working to implement some blockchain technology in order to improve their services for interbank transfers. So definitely in the nearest future, most of the altcoins will fade away. Bitcoin will stay as a store of value. Ethereum will stay for its use cases, the smart contracts and the actual use of it. And then we'll have probably some other ones like maybe XRP or Stellar, which is built for interbank transfers and those kind of things. But a few will stay. But I believe that in the nearest future we'll all work towards having central bank digital currencies.
Right. What do you think investors should do with this information now, knowing that Bitcoin, is the best performing asset class in 2024? Is it time to take profit?
Basically, it's not financial advice, but the way a traditional investor will do is have a long-term mindset, buy in early, know that you're going to be there for a very long time, because after some time, there are only going to be 21 million Bitcoin that's ever going to be minted. I think right now the total supply is already about 19.7. So we are getting close to the point where there will be scarcity of Bitcoin, technically. People can buy it for the long term. Those who want to trade can also look at the charts. So if you look at from 1 year ago, Bitcoin was sitting at maybe 26K. This year is 62K or 60. Right now, 61, 62K. Someone who bought in at exactly 1 year ago would have made about 120% profit. Somebody, you can always take profits and then wait for another cycle, if you get what I mean. So it depends on the trading strategy. But I believe that what people should do, diversify their portfolio. It's also very risky. It's something that everybody needs to do their own research. But it's definitely an asset class that I believe that people should, put a little percentage of their portfolio in.
All right, I guess interesting times ahead. I wonder how it'll look when all of the Bitcoins are finally mined. But I guess at some point, we'll all find out. Thank you so much, Shehu Dania.
Thank you very much for having me. Have a great day.
All right, so that's how major markets we track are looking today. You can watch this again on our YouTube channel and continue the conversation on X. Just search for Channels Television. I'm Ladi Williams. From me and the team right here at Channels HQ is bye for now.